Okay, get this. What if I told you there's a way for a massive, super profitable industry to legally pay zero tax? And no, it's not some sneaky loophole. It's actually a deliberate strategy. Today, we're going to dive into the world of global shipping to see exactly how Malaysia uses its tax code to build an economic empire at sea.
I know, right? It sounds like the setup to some kind of magic trick. How can a business making millions legally pay 0% tax? But the answer you'll see isn't a hidden loophole or some clever accounting scheme. Nope. It's a very specific and very deliberate government policy. And here's the best part. This isn't some secret backroom deal. The entire playbook is right out in the open, published by Malaysia's own Inland Revenue Board. So we're going to walk through the official rules of the game straight from the source. All right, so first question, why? Why create such a huge tax break for just one industry? Well, for a country like Malaysia, sitting right on major sea lanes, shipping isn't just another business. It's a critical, absolutely vital economic engine. I mean, this is pretty much Econ 101, right? If an industry is the lifeblood of your country, we're talking jobs, trade, staying competitive on the world stage, you're going to do what you can to help it thrive. And what's the biggest tool a government has to do that? You guessed it, the tax code. Okay, so we've got the why. Now let's get to the how. This is where we find the real golden ticket for Malaysia's shipping industry. It really all comes down to one specific piece of law, Section 54A of the Income Tax Act. This right here is the legal bedrock that makes this whole thing possible. It spells it out, creating a tax exemption for any income you earn from the business of a Malaysian ship. And the size of this exemption? Wow, it is staggering. We're not talking about a little tax reduction or a rebate. No, we're talking 100%. Your entire statutory income from a qualifying business is completely shielded from tax. And get this isn't some short-term gimmick either. The government has been renewing this 100% exemption over and over, showing they're really in it for the long haul. They're serious about making Malaysia a shipping powerhouse. So, okay, the key word here is qualifying. You might be thinking any ship registered in Malaysia, right? Well, not exactly. It's actually a whole lot more specific than that. And this is where the rules start to get really interesting. To qualify as a Malaysian ship, a vessel has to pass this strict three-step test. First, it has to be registered in Malaysia. Easy enough. Second, it's got to be a seagoing ship, so it can't just be hanging out in the harbor. It needs to travel beyond port limits. And third, and this is the big one, it cannot be on a list of specifically excluded vessels. You got to meet all three conditions, no exceptions. And this brilliantly shows you what the government's thinking. Look at what qualifies. Container ships, oil tankers, LNG carriers. I mean, these are the heavy hitters of global trade. Now look at what's excluded. Ferries, barges, tugboats. See, this isn't random at all. It's a super strategic choice to attract the big international players and the most valuable pieces of the global supply chain. All right, let's put this to the test. Here's a real case file straight from the tax document. You've got a company, ASTNBH. They own this powerful, high-tech barge. It's registered in Malaysia, and it's definitely seagoing. It travels all the way to Korea. So what do you think? It checks 2 of the 3 boxes, right? Does it qualify for the exemption? And the answer is a big, fat no. This is such a crucial point. That exclusion list is absolute. It doesn't matter how fancy or capable the vessel is. If it's a barge, it is out. End of story. The rules are strict for a very good reason. But, having the right kind of ship, that's only half the battle. You also have to be in the right kind of business. The law is just as picky about what you do with the ship as it is about the ship itself. So there are basically 2 ways to get this tax exemption. The first one's pretty straightforward. You use your qualifying Malaysian ship to transport passengers or cargo. Simple. The second way is by chartering, letting out your ship to someone else. But, and this is so important, you have to own the ship, and it has to be a very specific kind of charter agreement. You see, the law is very clear about the different charter types. Voyage or time charters, those qualify. That's where the ship owner provides the crew and stays in control. But a bareboat charter, where the owner basically just hands over the keys to the vessel, that does not qualify. And again, you can see the strategy here, can't you? The policy is designed to reward active ship owners, the ones managing crews and operations, not just people who are passively investing. Okay, let's check out another case file. Meet Company F SDNBH. They're a ship operator, but here's the catch. They don't own any ships themselves. They charter qualifying Malaysian ships from another company, and then they let them out to their own clients.
So they're in the business of chartering out Malaysian ships, and they're using the right kind of charters. Do they get the tax break?
And once again, the answer is no. This really drives home the main point. For the chartering exemption, ownership is the one rule you just can't bend. You absolutely must own the vessel you're letting out. Okay, we've gone through all the rules. Now let's see the real financial power of this whole thing in black and white. I mean, what does this actually look like on a company's balance sheet? So here's another case. MSDNBH. They start with an adjusted income of 48 million ringgit. Then, after they deduct some capital allowances, for the wear and tear on their ships, they're left with their final official profit for the year. This is called the statutory income, and it's the number the tax authority would normally be very interested in.
So, after all those deductions, you're looking at a statutory income of over 47 million ringgit. Now, for most businesses, a number like that would mean a pretty hefty tax bill is on its way.
So how much tax does this company have to pay on that 47 million? A big, fat zero. Nothing. Not a single ringgit. This, right here, is the 100% exemption in its most powerful, practical form. The entire profit from their qualifying shipping business is completely tax-free. Wow. All right, let's zoom out for a second. We've been deep in the nitty-gritty details, the specific rules, all the definitions. But what's the big picture? Why go through all of this trouble? Here's the key takeaway. This whole tax exemption thing is a finely tuned instrument of economic policy. The strict rules aren't random at all. They're designed to get very specific results. The government wants more investment in large, seagoing vessels that are registered in Malaysia. They want to reward the active owners and operators. The endgame? To make Malaysia a more attractive and competitive hub for the global shipping industry. And that really leaves us with one final thought, doesn't it? We've just unpacked the very specific rules for shipping in Malaysia, but it really makes you wonder, what other hidden economic engines are out there? In all sorts of industries all around the world, being quietly powered by highly specific tax policies, just like this one.